And then our next entry, it asks us to, let's see, December 1st, directors declared another dividend of $2.50 per share, and this is payable on January 2nd to those that are on record as of December 10th. And then we'll go ahead and look at what we have. So let's go ahead and use the date. We're going to do the date of declaration, which is December 1st, 2017. And we're going to do cash. And again, we're going to calculate our outstanding shares. And our outstanding shares this time, because we're at 0 treasury stock, is going to be the same amount of shares as the issued on December 1st. So we're at 200,000. So when we do our entry, we're going to do $2.50 times the 200,000. Let's see, 1, 2, 3. And oops, so it should be times. So I press the F2 key, edit, put in the star versus the plus, and we're looking at what, $500,000. And then we're going to go ahead and it's not cash because this is a date of declaration. What should this be? Right, it should be the cash dividends. Again, we'll do dividends is the temporary account that we'll use, and then eventually it gets closed out to retain earnings at the end of the year. So we would debit the dividends and then close it to retain earnings, and then we'll do dividends payable because we don't pay it actually until the next year. And we're done for this entry. So for our dividends, we had a dividend previously of 300 and then 500, so 300 and 500. 1, 2, 3, and 500,000. So that's a total of 800 that will be closed out when we do our entries. Oh, too many zeros. And that'll be when we close it out to our respective accounts. All right. And our last entry, let's see, December 31st, close $1,772,000 credit balance from the net income into the income summary, and then to retain earnings. So we close this amount from net income and the income summary too. So they only want that very last closing entry. We won't have to worry about closing out all the revenues and expenses, and it'll look something like this. Let's see, December, of course, skip a space, December 31st, and we will debit income summary, and we will credit retained earnings, and hopefully I remember the amount. It'll be $1,072,000, and that'll be the same. And when it's like this means it's not wide enough. If you go right between the two letters, double click, and you'll see that it automatically makes it large enough to go in the other parts. And I'm just going to copy this down so that I'll still have the lines. And then that should conclude our entries. If you want, you can go ahead and post this as well. 1072,123. And then to get the balance of the account, of course, you would have to add up all the debits, add up all the credits. So our balance would be equals the sum of all of so the credits are larger, so I want to list that first, and then the sum debit should be smaller, and we should get it to come out correctly. And our balance is $2,416,000 for the retained earnings account. So again, I'm just covering the journal entries, and that's just the first part. Then you should be able to prepare a statement of retained earnings, and then also prepare the stockholders' equity section, which is this right here, for 2017. That concludes this video, and if you have any questions, please post in Google Hangout. And remember, today is a great day to learn accounting.